Well, hello everyone, and welcome to the SoCal Edison webinar, May 20th, 2021. I am Cary Facer. I'll be hosting alongside Justin Rucci, Certified Financial Planner on our team. Justin, are you with us?
I am, yes. Hi, Cary, and hello, everybody. Thanks for tuning in today.
Awesome. Welcome, Justin. And thank you, everybody, for attending. So let's jump right in. There's been big news. And before we do that, of course, a little disclosure. Give us a call if you want a copy of our ADV disclosures about our firm and just details and the fine print if you need anything to help you sleep at night. This will work. Give us a call if you need this. Welcome to the stock market, Drew Carey says, where everything's made up and the points don't matter. Not exactly true, but sometimes it might feel like that with recent stock news such as Dogecoin, AMC movie stock, or even GameStop with all the internet meme stocks that we've heard about. This is sometimes feels somewhat accurate. So who we are, our team today presenting with me again is Justin Rucci, Certified Financial Planner. We are a true ensemble. What that means is we all work for the client and our client's best interest. And so we are going to be presenting today talking about the Edison stock freeze and the new ESPP plan. So without further ado, let's do that. Oh, one thing, Carissa wanted to share this. We just released this. You are the first to see this. This is a little video we made. It does not have to do with the stock freeze or the ESPP, but it does have to do with your options. And so this is in regards to your 401k options at Edison. So please enjoy.
Tesla, Amazon, and Apple. What do they all have in common? Well, if you work for Southern California Edison, then these are all companies that you have the option to buy inside your 401k. Hi, I'm Cary Facer, and I've been helping employees at Edison with their benefits, retirement, and money questions since 2007. You've seen the companies I mentioned in news headlines. Maybe you've traded them yourself in your own brokerage accounts. But you might be surprised to learn that they are also viable options for you to trade yourself within your 401k. It's true. You see, back in 2011, Edison updated their 401k plan to the current 3-tier option plan. Inside the Tier 3 choice, you can open up a personal choice retirement account, also known as the PCRA. After you open your account, you simply make a transfer from your core funds to the PCRA, log in to Charles Schwab, and start trading. Here's the disclaimer. Warren Street Wealth Advisors does not recommend you buy, hold, or sell any of the securities I just mentioned. However, if you want to buy stock, know this, you can purchase it inside your 401k plan with your 401k dollars. If you want to learn more about how to buy stock in your 401k or have questions about your 401k, pension, retiree medical, Medicare, retirement, then use the link below to schedule a free call with me or a virtual meeting. Plan today to invest in your tomorrow.
So let's jump into it. The news has been coming at us pretty quickly, and we want to thank all of our clients at Southern California Edison for keeping us up to speed. It's where we learn all about the changes, and then we dive through all the details and come back with our collective team of advisors with solutions for you. And that is what we do. So let's talk specifically. This is going to be a quick webinar. So Edison is freezing new contributions into the EIX stock fund. So why are they doing this? If, as I mentioned in the video, back in 2011, Edison went away from 42, I think it was 43 mutual funds to what's now today the Tier 3 option. And they did this for a number of reasons. There was actually a court case to challenge this, and this is common in the industry, are the funds that are in the lineup in the best interest of the employees. And so Edison made the right choice and updated the plan to the Tier 3 option. So Tier 1, and Justin's going to cover this in details in a slide coming up. Tier 1, Tier 2, 3. What they went away from was, in years past, is Edison stock was actually what's called the qualified default investment account or option. And when you made new contributions, and maybe you worked at Southern California Edison 20 years ago, or you had a family member, you know, a coworker who has, that was the default investment option. So when you signed up or enrolled in the 401k plan for the first time, the default option was Edison stock. And so what we saw was very common where clients, this is 10 or 15 years ago, retiring and owning 100% Edison stock. And so when you hear the term having all your eggs in one basket, it refers to owning one company. inside your 401k. That's at least how we look at it as advisors managing portfolios for our clients. So they wanted to go away from that. So what they made available was this tier 3 option, and they made the Edison stock no longer a qualified default investment account or option for you. And that was a step in the right direction. Now they're taking it a step further. What they're saying is no new purchases after June 29, 2021 stock market close. So after that date, you can no longer purchase any new stock inside the 401k plan. Important to note, if you own Edison stock, they're not going to force you to sell it. So you can keep that Edison stock. Now, Justin, myself, and the rest of our team, for the collective years we've been helping Edison clients, have always recommended to trim that investment down to around 5% of the portfolio. And that's our stance really for any single security. It doesn't matter if it's Edison stock, Peloton, GameStop. It's the same. We don't want to take on too much risk for one single company, and there's many reasons why. So the new way to purchase Edison stock is through the ESPP plan or the Edison Employee Stock Purchase Plan. And so they are going to be able to, you are going to be able to purchase with after-tax dollars Edison stock in the new ESPP plan starting July 1st. Now, there was an email that came out yesterday. We're going to cover that here on the next slide. So let me just jump right into it. What's basically going to happen is you're going to have the ability to now purchase Edison stock if you think it's the best thing for you, and we're going to talk about that in a moment. We don't necessarily recommend it, but if you wanted to buy Edison stock, you could buy it in the ESPP plan moving forward. And so back to the tier 1, 2, 3 option, if you, let's say you own $100,000 of Edison stock today, after the freeze date starts, you can no longer purchase any more new stock inside the 401k. So if you had $100,000, you could only get rid of that position. So no transfers in, no transfers within the tier 2 option, no new contributions from your payroll, deductions, no rollovers that came into your 401k plan could purchase new Edison stock. So there's going to be a freeze on that. And so our recommendation is always keep it down to around 5% of your total portfolio in one single company, and we'll stick with that for probably a while here. So what you can do though is you could take after-tax dollars and you could purchase stock inside the ESPP plan. So this email that's in front of me, these details just came out yesterday, which would be on 5/19, and there's going to be essentially a 3% discount for after-tax payroll deductions that is going to be available to you. We're a little light on the details as far as how long you're going to need to hold the stock. If you do have questions, there is a link here at the very bottom to join. It's not clickable here, obviously, but check your email to join Morgan Stanley's upcoming webinar. I believe is next week on May 25th. Justin and I are going to try to join that as well, so we can have some follow-up here and give our clients some real actionable items on whether or not we recommend to use this. As it stands today, we don't see any rush to go out and make any changes. If you own a lot of Edison stock, it's going to be the same advice we've always rendered, is you should probably pare that down to have a more well-balanced, diversified portfolio where we own many different stocks across many different asset classes and even geographies. We don't want to just be all US stock, maybe add in a little bit of international or even a little bit of emerging market stocks. So if you have questions, please let us know. I'm going to transition it over to Justin. He's going to go over the letter that was sent out to you, and then some updates and talk also about Edison stock specifically. So Justin, are you there?
Yes, thanks, Cary. So if you're watching this video, chances are you've gotten a number of emails in the last week or two regarding this plan. And so it's very easy when you get an email with a huge wall of text like this to get overwhelmed, get confused. And frankly, the good news is a lot of this is a lot more simple than it seems from just a quick glance at looking at the email. To kind of reiterate what Cary said, high level in the most simplest form, what's happening is if you are contributing to your 401k and adding those contributions into EIX stock, you will no longer be able to do that in a month or so, basically at the end of June. And if you want to continue to buy EIX stock, they are saying you now can do it, but it needs to be outside of your 401k or outside of your retirement account. And so individuals that are currently contributing to EIX through their 401k do not necessarily need to take action. I'll get to in a moment what the funds will look like, but basically they will automatically default you into a different investment option if you don't make any proactive changes. And then for individuals that are maybe maxing out their 401k and want to continue to save and buy EIX stock with that additional savings, they have the stock purchase plan available to buy stock outside of their retirement. So if you do nothing and you're currently adding money to the EIX stock fund, you will automatically default into the tier 1 target date fund. And the target date fund will just be based on your age and when the default retirement age is for somebody your age. That is not necessarily a bad option. If you're a current client of ours, you can still continue to transfer those funds into the PCRA from that target date fund. If you want to be a little bit more hands-on, you probably have a little bit better options in tier 2 and tier 3. You can be a little bit more proactive with the investment strategy. Tier 2 is investing in individual funds and kind of building in your own portfolio and maintaining it. And then tier 3 is a self-directed brokerage account Cary mentioned earlier in the presentation, where you can buy quite literally anything you want, individual stocks, and not EIX most likely, but at least historically, I haven't let you buy EIX in the tier 3, and it would make a ton of sense for them to add it now. But any other individual stock you have, a particular fund you might have that's not part of the tier 2 options, or if you want to hire an advisor such as Warren Street, or you have your own, that's where the tier 3 comes in. It's really the most flexible option within the 401k plan. Now, for individuals who have either been in EIX stock or are considering buying EIX stock, we just want to give some context as to how the stock has actually performed historically. And this is a total return chart. So this does include dividends, because that's a frequent question we get is, what about the dividend of the stock? How does that factor into the total return? And you can see over the last, this is a 10-year chart. Edison is the blue line. The S&P 500 is just the 500 largest companies in the US. And that's the orange line there. And you can see over the last 10 years, you will have almost tripled your return if you were in the S&P 500 versus having been invested in Edison. And that's, weighing the fact that you have either one individual stock concentration or you have your money spread out over 500 different stocks. And so from a risk perspective and a return perspective, it doesn't seem like, usually if you take on more risk, you expect more return. Not always the case. You want to pay attention to what historical performance has been for sure as one of your deciding factors. Here's a 5-year chart, just to kind of zoom in a little bit. So even more of a dramatic difference where over the last 5 years, you'll see the S&P 500. Again, this is just the US stocks. This isn't even factoring in a fully diversified portfolio. But if you just wanted to diversify in the most simplistic form and buy the S&P 500, you would have been up 123% over the last 5 years. If you had 100% Edison stock over that same time period, you would be down 1.2%. So imagine having your money sit for 5 years and you actually are basically flat or down for that 5-year time period. Regardless of the 3% discount they're giving you, if the stock performs in the future the way it has historically, which obviously no one knows if that's the case or not, the 3% discount is nothing in comparison to the potential return differential if Edison continues to underperform. I'm going to pass it back to Cary. He's going to go over some specifics about how we can help you in the tier 3 option if it's something you're looking at exploring.
Yeah, this tier 3 option is, we manage these accounts no different than if the client was retired or came to us at a young age and had a stock account. They wanted us to take over and do the investment management for them, build the portfolio, and handle all the trading for them. So same here. But if you want to use this for the tier 3 option, this is what it looks like. If you want to use this in retirement, this is what it looks like. Is we start out, and this again, this at the bottom here, this is our friends and family pricing. It's a program we've done for about 4 years now. And we offer this up to 5 families. So if you're referred to us, which the majority of the work we do for Southern California Edison is word of mouth and referral. Plenty of you that are listening to this probably might already work with us or were referred to us by one of our clients, and we thank you for that. And so we have a program that allows bundled pricing for up to 5 families. We currently work with about 300 families and businesses here in Southern California, and that's about 500 or 600 accounts. And we offer this planning or this program because it's fair for everybody and allows us to compete with the really large kind of robo advisors. Except if you saw earlier the picture, we're real people that handle the work for our clients and take good care of them. So this is our pricing schedule. If you come in and you're not referred, you'll start at the 125 and 115 rates. As soon as you refer somebody, you drop down immediately to the 1, and so do they. And we thank you for the word of mouth business. If you don't want to have us do the 401k on the tier 3 option, we do offer a 401k assist. So we use the tier 2 option options for you. And it's a nice introductory service into what we do. We'll link the account so we can actually view your 401k on a daily basis. So if you called one of our advisors, Blake, Emily, Justin, or myself, and you had questions about what was happening in the market or personally in your with your plan for retirement, we could actually see your 401k on a daily basis and make adjustments if needed. Traditionally, what we do is a one-time allocation, and every 3 months, we're checking in with you to see how you're doing towards your goals. And that would be the 401k assist program for the tier 2 options. We have a process 1 through 6, establish, discover, plan, solutions, implementation, monitor, adapt. This is a real process that we follow for clients that come on board with us. And just want to share with you, we don't wing it. We have a plan too. And so, well, we do use our collective judgment as a true ensemble team for our clients. We do rely heavily on data. So behind the back end of a comprehensive financial plan is a lot of data that we do use to help us make decisions with our clients. And so I just wanted to share what that looks like. And finally, the investment management, because we do manage portfolios for our clients in-house with our team of traders and research analysts, head by Blake Street, my business partner in the street to Warren Street. He put together this years and years ago when we first started working together back in 2013. And we still use the same method to trading our clients' accounts. We have 3 core portfolios we manage. It's stocks, bonds, and real assets. And then we blend those 3 to come up with a custom portfolio for you based on a risk spectrum of low to high risk to accomplish whatever your goals, objectives, and really time horizon are for your plan. So we can build you any custom portfolio that you need. And the neat thing about this too is our trading tools in the back end allows us to trade for all accounts, regardless of account size. So if we decide to reduce risk in our global stock portfolio, and this blue piece is part of your portfolio, and we make an adjustment right here to this little piece, that trade will trickle out to every single family that we manage money for if they own that little blue sleeve. And we can do that any given day if we need to. Now, we are not we're not moving chairs around the room just to look busy. But if we wanted to make some tactical shifts, overweight or underweight to a specific asset class based on data and our research, we do. And we not every day, I don't want to spook people here, but we do make these tactical shifts often. And sometimes it's just a rebalance. And we can talk more about that specifically one-on-one if you have questions about how we manage money. So now we got to the questions section. So we have some questions that came through, but we're going to address these one-on-one. And so what I want to do is I just want to thank everybody for joining us today and let you know that if you want to schedule some time with us, we're going to recommend you just go to our website, warrenstreetwealth.com. There's a schedule link there to schedule time with myself, Blake, or Lynn Hansen. Myself and Blake are really kind of the Edison experts. I personally have been working with Edison space for about 14 years now, but it does not make any difference who you schedule time with. So please just go to warrenstreetwealth.com and take a look at our schedule link. We will offer you a free 30-minute retirement consultation, no strings attached. Our goal is to help you transition into retirement with success one time and not have to backtrack with common mistakes that we've seen over the years. So please reach out to us. We're happy to help you. And again, a free consultation, no strings attached. Justin, are we good? Give me a thumbs up if we're all good.
We are good.
Awesome, buddy. Well, thank you everybody for attending, and please reach out to us if you have any more questions about the stock freeze or the ESPP plan. We are here to help you. And if you have anything specific, just give us a call. Thank you everybody for attending, and we will talk to you soon. Take care.